It's a new one. We've got the very rare occurrence of the Jay's Corner podcast, audio only. Good morning. It is March 21st, around 10:20. I thought to bring up a few different items. We're going to get to them quickly. First, don't forget, always, jo.substack.com. It's a free newsletter. It's the Jay's Corner Substack. There's a paid version. The paid version has additional information, additional access to videos and other insights that candidly I just can't put up in public for public view because we live in a gaslighting society. And while I can't give, and I'm not giving financial advice on the channel, any of the channels in public, the fact is I will have other opinions and other insights that are valuable and that you should have. So on we go. Important to know that on Sunday, 10 a.m., I'm going to try to make this every week. We've been so for the last 4 weeks, which is I will be live on YouTube. Jay's Corner, which is the name of the channel, on YouTube at 10 a.m. on Sunday. Plenty of time to watch the basketball before they get to the Sweet 16. Anyway, market lower here, not financial advice today, but on Sunday I'll talk about it a little bit more, which is basically that I found the messaging of the Federal Reserve to be a little out of touch with reality, a little bit odd from my point of view, that to say that the effects of inflation and possible tariffs to be transitory, it sounded a little bit like he got a talking to by the administration, saying this is the party line from the government. You don't want to screw up the confidence of the entire economy. Therefore, you need to tell them it's transitory. I'm not alone in finding that particular set of wording to be unsatisfactory. I'm not alone at all, but it struck me during the time I do watch these press conferences because I want to hear his tone and tenor. I want to hear the quality of questions that are being posed to him and how he reacts. And then with an eye out on screens, meaning it's just to see what the market reacted. I was surprised on Thursday that the market reacted as positively as it did. Perhaps it was to say, well, we really hate this. We really have very low expectations. That may have been it. Nevertheless, I found it odd. Overnight, we had 2 earnings. I guess overnight and this morning, we had both FedEx and Nike, who probably gave a better look at the overall state of the world. Meaning that Nike, incredibly, minus 33% from the all-time high, or actually not the all-time high, but the recent highs, kind of like $100 a share to $66 a share. FedEx also way down. So basically, these to me are very good benchmarks about and people telling you what the everyday people of the world are experiencing. For me, that's what it said. And that was not a positive, obviously. Nike down something like 7% today. Still, again, not financial advice, just observations. So important here that when I'm making observations, I'm observing, not predicting. Right? I will continue to say everywhere in every medium that I can possibly that we are not the predictor of asset prices. We are the careful observer of asset prices for sure. I'm trying to share with you what that looks like, how I see it. But again, those are external facts, and more than the fact in isolation. What I'm trying to think through all the time is the reaction. The reaction. How, because that is giving insight on what the other guy has thought, what the other guy was trying to predict. If I thought that I could predict the future, there's no reason for running a diversified anything. We don't need a diversified anything. If I get to predict the future with perfect certainty, life becomes very, very easy. Really does. Because you can make much more on other matters than in financial markets or financial plan. You don't need to write a book about Medicare at that point. That said, along these lines, let me talk about the financial planning aspect, because this morning on Bloomberg, 5:30 in the morning, came on Bloomberg.com, and I'm a subscriber to Bloomberg. It is one of the few publications that I read, just because its information is not really there to tilt to a political agenda. But the byline read, money-losing retail crowd keeps buying stocks as market teeters. I find this incredible. And first of all, given what I just said, right? So now the article continues to say that even though the S&P is down 3% that retail investors, based on the data that they got from brokers, shows that their activity by retail is minus 7%. Now, there are a lot of videos on the YouTube channel. There's a number of locations on the newsletter where I'm talking about this concept of sequence risk, because candidly speaking, I cannot have right? Because I can't have their total net worth on which they are relying to last a lifetime, right? Especially for those people under retirement or approaching retirement, which is very, very different from a 25-year-old, right? 25-year-old, to be candid with you, probably buys every time they see minus 5%. They buy more in dollar terms. That's what they should be doing. That's fine. But for other people, my point here is for a 100 units to go down to 93 units, nothing stops it from continuing down. And now, for example, 2022 was a very good example, and I'm glad that it occurred, because as an illustration, that yes, you could say down only 1 year in 6. That is true, statistically. That said, it doesn't help you if whatever you had was 100 units that time went down to 85. Because that 85, you are trying to withdraw money from 85. And by the way, a cost of Cheerios has spiked. And while financial markets went down, continue to go down, let's just say, from the beginning of this year, the price of Cheerios did not decline. So the actual, right, I mean, you remember that there used to be something called a Big Mac index, which is basically a Big Mac index is equating the Big Mac around the planet to just kind of compare countries to countries and their standard of living and how much things cost in these other countries compared to the United States. Well, in the same way, if you just think about it, right, I tell the easy, tongue-in-cheek, snarky perhaps, well, that's part of my charm, right, is that you do not redeem your brokerage statements for groceries. You redeem cash, so of which you have to be taxed. So it is post-tax purchasing power that should be the objective through time. This has all sorts of implications. Tax efficient investing as a plan. Now all of a sudden the door swings open to Roth IRA, etc. well beyond today's broadcast. Second, here is that this is why I found today's article in Bloomberg stunning. That the persons who are with the least information in financial markets are continue to buy stocks, even though what was 100 and now they're at 93. This is particularly worrisome if that person is nearing retirement. Because if 93 turns to 85, and now you have a combination, inflation higher, emergency problem, home insurance higher, and you can see what I'm saying is that one fact in isolation by itself, you can hedge off, right? You can buy protection. You can make some combination of activities, right, to mitigate one variable, one source of risk. That can be done. That could be done easily. To combat and deal with a combination of events gets much harder, not double. So, right, if you add an extra element of uncertainty, it doesn't get twice as hard. It gets more than twice as hard. So now you can understand why I wrote Maximize Your Medicare, right? I'm trying to reduce your cost. Why? Because I don't want you to have to spend more than you should. That will change from Mr. Perfect to Miss Sick a lot. I get it. I've spent a decade writing this crazy book. Don't write a book. Bad idea. Anyway, you can see my point here is that we go on and on. And when I see these kinds of headlines, that's why I hit record. I'm like, I'm not going to talk about it on Sunday, or I'm going to make mention of it, but I'm not going to go to this type of further deep dive on it. Market lower. The Fed did not, the A+ student got a B on this test, right? So for me, I thought that was a failure. The market snapped higher that in the coming hours just to give it all back plus. And this is probably what I have expected, right? Given what the Fed chairman did, and yet retail keeps buying. Without a crystal ball, we don't know what makes markets go up or down. Well, I am an observer. I have a better idea than most, but what I'm saying is that it's hard to pick out a signal to say, okay, it's a buy signal, it's a sell signal. Let me just say, when I read headlines like this tells me the bottom isn't here. The bottom is not here. When retail goes one way, generally speaking, it's probably not the right way. Why? Because it is a report of a big but least advantaged crowd, least advantaged population. The population who controls the money is not retail. Now, that said, it is a lot of money. That has to be respected, right? So what can happen is the retail crowd, even if wrong, it's kind of like as the example I've used in pub or in writing and on previous broadcasts and things like that. Look, if the dumbest guy in your neighborhood who has all the money buys 3 houses on your street, guess what? The price of houses in your subdivision are going higher. The end. In this way, however, what you have, and we've had this over the past, even since February 6th or something like that, there was this article which said it was the greatest 2-day period of buying of the ETF SPY, which represents the S&P 500, which not coincidentally to me, it said it's almost for sure not time to increase allocation to risky securities. Just put it mildly, gently, as nicely as possible in that way. That's all I've got here today. Please be sure to subscribe to the podcast on Spotify, anywhere you get your podcast store, someone called it. I found it funny. I generally have simulcast, meaning that there's the Spotify broadcast, the Spotify version is going to be video only because, as we know, video is the medium. And even though I'm reluctant, I'm still a citizen of that world. If you have questions, info@gh2benefits.com. Info@gh2benefits.com. It'll be in the text below wherever you have located this podcast. I'm Jay. Thank you so much. Come and visit me on Sunday, 10 a.m. Eastern Time on YouTube at the Jay's Corner channel. Thanks, everybody.